December the 2nd, 2025, 12:33 a.m. early Tuesday morning. Into the charts we go. Part 3. Part 3, we've been looking at some indicators, and if you haven't watched Part 2 or Part 1, I recommend you watch everything in order if you want to be well-rounded. You have choices and you have options. Knowledge is power. The investment of your time into understanding this information in the chart layout is a beautiful thing. And for many people, the investment of your time in understanding and doing what it takes to get those gains are beautiful. If you don't have an account with Tradingview, based on Part 1, as we looked at the tiers, or you don't plan on getting one, this is just entertainment for you, something to pass the time. If you're not learning to count cadence like we went over in Part 1, as we talked about the 1 and the 3, golden and death cross, the 2 and the 6, the 9 and the 21, the 50 and the 200, golden cross and death cross, we want to make sure we're doing our due diligence. People want to pay attention whenever they get into a field of study that they think is going to pay gains. People usually pay, unless they have awesome scholarships or a really great athlete, they pay to go to school, and hopefully if they do their homework, they get into a field where the probability of them getting employment is very high, enough to pay back the student loans or whatever, and is very profitable so that they can build a life that they desire for themselves. They have to put the work in. Here, you may be sitting at the computer for just a few hours, but the skill set for the investment of your time, an account with Tradingview, an account with Coinbase so that you can get the Coinbase debit card, Uphold so that you can get the Uphold debit card, and Robinhood, whereby which you may do most of your trading because the fees are so low, are 4 beautiful accounts. And so we have to do our due diligence and take the advice. And no one can perfectly walk you from point A to point B. To build an account with Coinbase, you have to do some things. Robinhood, Uphold, you have to do some things. And to get an account with Tradingview, you have to do some things. And that's not it. Now you've put up a small investment of some small resources and time, and you still have to execute the trade, because we're looking at the logic of jumping in and out of trades. And as soon as we jump in, we don't want to feel like, oh, we made a mistake because the price went the other way or something happens. We're making the most valid decision. Again, this is not a scratch-off lottery ticket. To me, it's better. But you work with what you have from where you are. And don't be afraid to make mistakes, because if you don't have something to hold your attention in your charts, your knowledge won't increase regarding trading and using the beautiful indicators in the chart. All right, let's look at some more indicators, shall we? All right, we love the simple moving average wind channels. And we looked at the 9 and the 21, really fast mover. Let's in fact go to a 1-minute chart. We may see more information that way. Ooh, that's a 1-month chart. Let's go to a 1-minute chart. We'll compress time. so that we see the ups and the downs. And you should understand what you see by now, okay? In a nutshell, even though I've compressed time a lot. We want to add another wind channel on here. The wind channel we're going to add, first let's look at the settings, is the 111 and the 200, as well as the 200 and the 400, correction. The 111 and the 700 down here, and the 200 and the 400. All right. Let me first talk about the 111 and the 700. So I'm going to take the 200 and 400 away. Right now, things are hidden. I'm going to add more wind channels on here, but now you're going to see the biggest one come on, the 111 and the 700. Based on the time frame, 111 minutes out of 700 minutes, whatever time frame that you're on. If I was on the 5-minute chart, it would be 111 5-minute candles out of 700 5-minute candles. Again, simple moving averages. Let's put the 111 and the 700 on. You're going to see dotted white lines to outline the border of this massive wind channel. It's generating, is coming. Should be coming. I don't see it yet. I'm auto adjusted. Oh, you know what? I probably clicked on something else. Let's see. 13 and 48. That is showing up. Maybe I didn't click on it. Let's put show. All right. Dotted white lines. Outlined in green. Massive. Okay. Simply massive. Don't we travel down through positive? Mm-hmm. So you travel down through positive of the yellow. You travel down through, that's the 9 and the 21. You travel down through positive of the 13 and the, I should say down through negative. You travel down through positive and up through negative. So you can see you're all green here and you're traveling down. Beautiful, right? So you're traveling down through positive of the 9 and the 21. You travel down through positive of the 13 and 48. Down through positive of the 50 and the 100. Down through positive of the massive 111 over the 700. And just like we looked at the wind channels, you travel up through negative, but down through positive. But now as we compress time, let's find that golden cross where we flip from red to green. Look at the red channel before it closes out on the 111 and the 700. You traveled up through the negative, up through red. And we can see that the 9 and the 21 golden cross with the 13 and the 48 help us do that. All right. You turned positive here. I'm looking for my white square. It's probably so tiny because we've compressed the candles, but you can see the massive uptrend whenever you caught the green. Let's add it to show and reflect this here large white square. You see that? And as you're getting the early warning system, and keep in mind this is a 1-minute chart, these are big moves, especially as you creep up to time frames higher than 1 minute. You have the trend within the trend within the trend. Beautiful, right? Now, even though you've been coming up, you get a pie alert. And this can signal a number of things. It can mean one or two things. You have a golden cross, a flip from red to green. But because things are so massive, the trade went down. And that scares a lot of people because immediately after the golden cross of the 111 and the 700, the death cross wanted to come in. And that could be scary because the move could be massive. Keep in mind, 1 minute chart, it doesn't matter what time frame you're on. You have to have confidence about seeing what you see and knowing what you know. And as long as the channel continues to open wider and wider, wider and wider, put it on the white so you can see it, and wider, touch the white so you can see the outline. This is great because you probably started getting in back here, but we love when we see this. And what happens, the price can dip, but usually it's just lots of oscillations. Now you have the city chasing the dog pound, chasing the dog, chasing the cat, chasing the mouse. There's a lot of information in here. But you can understand where you are, not just blue and yellow candles, but to ask why the price is moving up or down, and to understand moving averages. And notice what's going on here. Compress time again. Get to the end of the chart. Massive channel. Massive. All right. And as we dip into it, it wants to minimize the width. Right? This is larger than it is in here. You bounce out of it because this is upward price action on the market, even though the red squares want to come in. Like when we open up the time, you'll see the red squares in the midst of the red triangles. That's the death cross of the 50 and the 200 wanting to come in, and the red squares eventually wanting to come in. And you'll have golden cross and death cross of the 50 and the 200 in the midst of the humongous 111 and 700 golden cross here. So you have lots of zigzags and oscillations as the city chases the dog pound, the 50 and the 200. That's chasing the dog, the 9 and the 21. That's chasing the cat. That's chasing the mouse. All right, you count cadence and you see what's due next. Look at this. Just look at this. Now, compress time so I can get to the end faster. All right, and we can see we're traveling down through some of the green. It may bounce out before the channel closes, the massive green channel. You will be beneath it. Keep in mind, this has been moving up the whole time. And the top faster moving channel, the 111, has been just bouncing back and forth. It's wider here than it has been back here, than it has been back here. So we're eroding eventually the width of it. Now, golden cross of the 1 and the 3, yellow and blue. Golden cross and death cross of the 1 and the 3. ushering in the golden cross and death cross of the 2 and the 6, triggering the golden cross and death cross of the 9 and the 21, triggering the golden cross and death cross of the 50 and the 200, triggering the golden cross and death cross of the 111 and the 700. Massive moves. But to know where you are, besides just looking at green and yellow candles, is more information. And if I was to trade on a 1 minute chart, I will probably look for my 111 and the 700 because the trend can be more sure. And when I have the percentage I want, I'll exit. All right. Now, within the trend, we want to put on the 200 and the 400. So let's open up the candles back because this is a continuation of the wind channels. Simple moving average, one's the weighted moving average, more heavyweights. Let's add the 200 and the 400 and tell you about this. Now, watch what shows up as I flash it on. Outline in dotted green. All right. I'm going to take it away and put it back on again. And it's showing up here. All right, let's talk about this. When we're in this specialized zone, open it up a little more. Let's take away we got a lot of overlapping of colors here, and I may want to change some colors to make this stick out a little better. Wrong one, right? We wanted the 200 and the 400. Outlined in dotted green. It's going to be smaller. See that? The 200 and the 400. I like to have this on here because usually when you're in the 200 and the 400 outlined in green, dotted green, when you're there, you pay close attention because when you're in this dotted green channel, let's open this up wider. This is decision time. And sometimes you consolidate in it, but when you're in it, a decision, a major decision, especially if you trend in there, is about to be made. Let's see. Take away the risk adjusted momentum oscillator. You can see the channel here. All right, we got some 50 and the 200 golden cross, the black lines. But in there, you see the 200 and the 400. If ever you're in that channel, pay close attention, especially if you're trending in there, because you can have a massive move to the upside or the downside. Let's see here. Okay. You see this right here? A decision has to be made. That's how I want you to look at it. And before it closes out, you will be beneath it. How do we know we're going back up? Because it's green. Nothing's closed out. And if it does close out, you're usually beneath the positives, right? You travel down through the positives, but up through the negatives. Now you can understand why the candles are moving up and down. Based on part two, and lingering into putting more information on from part 3. Now we have a lot of information. All right. I'm losing all sense of time here. Let's look at more information. We like this information here. See your support and resistance lines. You can see a lot of information, and you want to know where you are in reference to these moving averages. And what moves fastest in here, your 9 and the 21 is usually what you're going to watch first, the blue and the yellow, because you'll pivot down through the positive and up through the negative And then you also look at your 13 and 48. Same thing, down to the positive, up to the negative. Then you'll look at your 50 and 200. And then you look at your 111 and 700 outline. Seeing what's positive and what's negative. All right, so lots of information on the chart, more information. Now, do you need it? No, you don't need it. Depends on what time frame you're on. But I like when I see the trend, because as you start getting this massive 111 and 200 golden cross and death cross, stay right there. Based on the upward trend of the golden cross, the white square, and the alert, we call it pi. Pi is 3.14, and the sequence continues beyond 3.14, and it continues in non-consecutive numbers, 3.14589, and the number just keeps going. And this is mathematically sound based on pi. And also, we'll introduce the pi cycle tops here in just a minute. But let's talk about the 2-minute chart, because if we're on a 1-minute chart, then things tend to linger as we go up in golden cross and death cross for this massive mover. It may filter into a higher time frame like the 2-minute chart. Let's just click on and see if it filtered. Everything will shift. Now every bar is worth 2 minutes. There's pi right there. Right? At first it was back here. Now it's right here. Has it lingered into a 3-minute chart? Let's see. Pi is found on the 3-minute chart. Now, we caught it as soon as it turned a corner. Really quick. Is it on a 4-minute chart? It may or may not be on the 4-minute chart. If it's not, let's look at the dotted white lines. Look there. Closing, you're up above the negative. You ride up through the negative. And pi is manifest. What is it telling you? This thing is turning the corner. Your golden cross of the 111 and the 700 has come in. Now this is massive right here. Positive price action along with the 50 and the 200 golden cross in connection with the golden cross that is wanted to come in. White squares here, right? When it gave way because the death cross took hold, you got to pause. But what introduced it? The 50 and the 200 golden cross again, working along with the 9 and the 21 and so many other things. Let's compress the bars. You see that? The 50 and the 200 ushered in the, well, it was ushered in by the 9 and the 21. And it helped sustain it. And so your 9 and the 21 helped ushered in the 50 and the 200, helped triggered the bad boy, the golden cross of the 111 and the 700 dotted white lines, up through negative, down through positive. Now we get to see how wide this channel is going to open. Is it on the 5-minute time frame? No, but it's coming. And usually once we hit the 5-minute time frame and the 15, most people feel comfortable getting in at the 5-minute time frame and 15. Because you'll have golden cross and death cross in the midst of, on faster moving charts, you have lots of them. Like if I was to click on a 10-second chart, you probably see, let's just say theoretically, 10 golden cross of the 111 and the 700 compared to seeing it one time on the 5-minute chart. You have more oscillations on faster time frames. All right. It's about to come, possibly. And before this 111 and 700 white channel, dotted white line channel closes out, we will be above it because we travel up through negative. Now, where we are, can it open up some more? Yes. But based on the time frame that we're on, I bet you before it closes, you'll be above it. Before the dotted white lines are done and flip from red to green, you'll be above it because we travel up through the negative. We've done it all along here. I mean, why should it change now? And so we hold true to traveling down through the negative, correction, down through the positive, right? Down through. Now, this right here, we know it's going to come back up before it closes. But there's a positive, right? Down. You got some green down here, whatever that is. Probably the one in the 200 and the 400. A decision has to be made in here. What's going to be made? Well, the 50 and the 200 golden cross, green. Before it closes, you'll be above it. Well, below it, right? You travel down through your positives, but up through your negatives. So I see red there, but the price is going back up. Right? It's not going to stay down before these negative ones close. All right. So that 13 and 48 right here is about to close. Let's see if it's positive or negative. It's green, it's positive. So you travel down through positive. Makes sense. You travel down through positive of the blue, down through positive of the green, 13 and 48. Before this yellow channel closes, you will be above it because it's a negative channel. Before it closes, you will be above it. Now, how far it is to come down, you have to be seen. But we wanted to show the big mover. Let's look on a 10-second chart. Auto adjust the candles. All right, you see where you are. Isn't it beautiful to see where you are? If we compress time on a 10-second chart, let's see where the death cross occurred. Look at the death cross that came in. And a lot of things can happen. But as that channel opens up, notice this force and price action down. Now you're in the midst of the 200 and the 400. Decision has to be made, a major decision. And look what happened in the midst of the dotted green channel, right? A major decision was made. It was a big move to the downside. All right. So in the channel, a major decision needs to be made, right? Something is going to happen to the upside or the downside, usually in a big way. That's why we got the 200 and 400 in there. And usually it can be anywhere. It can be in the 111 and 700 channel. It can be in the 50 and the 200 channel, what's in the black borders of the line here. It can be in the 9 and the 21. It can be in the 13 and the 48. All right. It's getting technical, I know. But if you remember that you travel down through the positives and up through the negatives, then this is pretty good territory right here. And look, you're in a zone right here. A decision has to be made. Will we go down further or up further? Watch and see. Count cadence. And notice before the blue line closes out, before the blue closes, you will be beneath it. Before the blue flips to yellow, all the principles are the same, but we wanted to add that one. Now, when did I start? Oh, when did I start? I lose such track of time. I should be asleep, right? Got the risk adjustment momentum oscillator. Let's talk the market is heating up and cooling down. Let's talk about the hybrid indicator, the relative strength index, and the stochastic relative strength index. Before we talk about it, I'm going to show you some colors here. Green can sometimes mean go. Green means you're at a low point in the market and you should think about investing. Like green light, yellow light, red light. All right, so green could be something that say, hey, the markets are really cool. I should probably look at everything else in the chart and see if it's worth getting in right here because you're at a low point. So green means go. Yellow is starting to say, hey, if you take a trade up in here, things can go back the other way. Red, usually the markets are at the top. And sometimes you catch a beautiful trend in here. But if you start hitting red, you can see when the markets are heating up, reddish color, cooling down, pink, white, and going cold, orange, yellow, green. Let's put this on here because it's going to give you more information about where you are and why in connection with the moving averages. Now the colors may blend and run into each other, but this here can give us also a numerical value of the strength and speed of the market, not the price, but we're going to put the colors on first. And as the candles go up, you'll see the price goes from like white to pink to red. And then you'll see it cool down to shades of yellow and also areas of interest, green. Check this out. Click on it. All right, we're going to show it. Here it is. All right, you see this right here? This also lets you know where you are. You don't want to buy up here unless you see a serious trend to the upside. You start getting in down here, this thing cool down on you, price is going to dip. This is valuable information. And let's see if we see any greens anywhere. This is tricky right here, right? Green is always tricky, but the markets are really cooling down. And if we were to open things up again, we can see, even though the 21 simple moving average is moving down a lot, we can see when things are starting to warm up, heat up, heat up, heat up, cool down, heat up, that's red, cools down, look at the colors. White is almost neutral or in the middle. Warm up, cool down. Well, we should say warm up, warm up, warm up, cool down. And you look at the price action. It's a beautiful thing. It's more information to visibly see that. Now, 21 simple moving average, what is it doing? See where we are. All right. Now I'm going to open this up and expand it a little more. Look at this. Valuable information, right? Valuable information. Valuable information. Notice cadence. You're counting cadence. Market cool down just a little bit. What comes after yellow? Blue. And the blue can usher in the green. If it don't, we'll get another yellow. So it's either green or yellow because we're counting cadence. The market's heating up, cooling down, heating up, cooling down, heating up. Will the blue come in and usher in the green? Disappeared. A lot can happen in 10 seconds. Right? It depends on how things print. All right. Now, I'm going to put on the strength and speed of the candle. But when I do that, things can change rapidly. let's add a numerical value of the candle so we can see where we are in conjunction with the color. All right, now let's go back here and go to settings. And now we assign a numerical value to the chart. Green means you cooled way down. You're lucky if you see dark green like that. It's probably a great entry point, but you have to see if the 21 simple moving average, the white line in the midst of the blue and the yellow, is moving down. You don't necessarily want to start jumping into trade when the white line is moving sharply down. But at least you can see when the markets are warming up, because that can help put candles on the white line and above it to flatten it out and eventually make the white line start curving up. All right, but you see the numerical value attached to the candle itself. So now we're going to put that on, and let's just move this to the side. And look at the numerical value. It's not the price. The price is to the right. But you can see the market's heating up and cooling down, even though you're flat here. Everything is in reference to the 21 simple moving average. But now we got the strength and speed of the candle so that you know where you are. We can see the market heating up right here. The orange is getting darker. White, it's like white hot now. Still heating up when it goes from red, and there was a darker shade of red. Well, I would say pink. Let's see if it gets hotter or cooler, and look at the numerical value. That could cool down, right? The number is less than. Now you're moving flat. The price isn't moving anywhere, but what do you see? You see the 50, the 200 moving average coming to a close. Is that a golden cross or a death cross up in there? Also, are you in a zone of interest? We're just slightly below that, but we're above the dotted green line. Decision has to be made. We were in it, but then we weren't quite in it. We start getting in here, it might be time to cut up through some red, right? All right, let's auto adjust so we can see. Look, it's really flat. It is so flat. When you're flat like that, all right, good. We're in the 50 and the 200. That can sort of close out the channel. When that comes to a closer pinch, we'll be above it. Also, you gotta look at where you are. Is the trend overall still moving down? Let's see. We can see as we are into the 111 and the 700, start flattening out the border and eating away at the red. When we're beneath it, it's opening up. Where we're into it, it's coming more towards a close. And it's nice that we stopped the downward trajectory so far of the dotted white bottom base line. We're flat. Let's open things up. We can see that we can start cutting up through the 111 and the 700 massive channel here. All right, notice we're just outside the dotted green lines, the 200 and the 400, just outside of it. Price is so flat right now, but you have a lot of room to travel up through. Notice support and resistance lines. Let's take the numerical value away. You can look at the markets heating up. Here, warmer, about the same. The 1 and the 3 can usher in the 2 and the 6. Hot, warmer, cool down, price is flat. So your moving average are usually converging onto this point. One more thing I want to add as we talk about this. Take the numerical values of the candle away so that we can just appreciate the background. cooling off, right? Cooling off. Still beneath the dotted green line. When you're in 200 over 400 territory, a decision has to be made. So now I'm going to open things up using the mouse, and we're watching the fastest mover of our colors. Not necessarily the 1 and the 3 right on the candle, or the 2 and the 6, I would say right on the candle, but the 9 and the 21. Before that blue channel closes, you will be beneath it. Now, being above it can open up the channel a little bit. Before it closes, you're beneath it, right? Now you're yellow. Yellow can drive you down, but before it closes, you'll be above it. Before it closes. You also have your 13 and your 48 in there. That went from negative. That's why you went up. And flipping to positive, it may turn green. So sometimes you have to look closely at where you are to determine price going up or down. And you can see you're at the bottom of the barrel pretty much. This is a great place to start dollar cost averaging to, because the price will usually begin to go up on you. Because you have to get through all this red. You go up through red or up through the negative, but you go down through the positive. So before the massive 111 and 700 channel close out, you will be above it. But you have your moving averages in there. Notice you're starting to cut up through red. Now you're within this territory right here. It means pay close attention between the dotted green lines, the 200 and the 400. And typically you'll travel up through red, but anything can happen in here, right? And usually you'll stay away from it until a decision is made. If we're consolidating in there with a few candles, you're paying close attention. All right. Fibonacci Bollinger Bands. Last thing we're going to add. Are we tight? Let's auto adjust. Oh, we don't get Fibonacci Bollinger Bands with ZBC in for some reason or another. Back on the risk adjusted momentum oscillator then. And there is one more thing we can add. But that has been on here for the last episode. Probably it's been on here for a while. I never removed it. We call it the two-pole oscillator. When you're above, you can trend above it, but we see green means value pouring in, price going up. And red means value going out, sometimes price going down. When we're beneath these 2 to 4 zones, we can go up. When you're above and you start turning red, you can go down. So we see money or value pouring in, even though the price is stabilized or flat. It gives you more confidence about where you are and if value is pouring in or pouring out. And where are you? If you're down here, it's great to take the trade to get in and ride some value up. Beautiful. You see the value coming in. It's a visual. All right. Still a great place to be, even though we're on a 10-second chart, counting cadence, learning very fast. All right. That's it on that one. I have to close out this because I have no sense of time. No, none at all. I'm totally absorbed in the chart. Introducing pi right now would be too much. We do have the 111 and 700 giving us pi, golden cross and death cross, large white squares when it comes in for golden cross and large red squares coming in for the death cross. We do have that type of pi. There's another type of pi. We'll talk about that on part 4. Right now, Let's go over the disclaimer. And because the disclaimer is so important, you need to understand that I am not a financial advisor and nothing in this presentation should be deemed as financial advice. I'm teaching you the chart and the chart layout so that you can put any asset on here: gold, silver, cryptocurrency, oil stocks, oil ETFs, mining stocks. You can look at anything cryptocurrency, and you can understand where you are and feel confident about price movement. I'm going to allow this one to load, and I'm going to talk about just a little bit time as far as good entries and exits using Pi. For right now, let's let our beautiful outro take us on out, and why things can drastically flip one way or another, even though you usually get an indication in the chart first. Usually you see it in the chart first, or the setup may come first. Keep in mind, as we look at the higher time frames, your mind, as we introduce Pi, is probably going to be blown just a little bit. This is great. You need to have your mind stimulated and blown just a little bit, because when we plant this seed of understanding parts 1, 2, 3, and 4 indicators, you'll walk around with a new found confidence and wished you would have gotten trading long ago. Trust what I tell you. And you've probably done it before, but we're using really clean-cut indicators to increase our financial IQ and our success. Let's let our beautiful outro take us on out as you read the disclaimer softly, silently, sweetly to yourself.
Your instructor of this extraordinary chart layout and information expounded upon is not a financial advisor, and nothing in this presentation is financial advice. Cryptocurrencies, ETFs, ETNs, stocks, bonds, commodities, you name it, these things can be highly volatile. You could lose all of the money you invest. You should always do your own research and consult a qualified, licensed professional. Your investments are your sole responsibility, and you should know that nothing is ever guaranteed when it comes to investing or trading. You know, an explosion can go off somewhere, a train can derail, a bank could collapse, or there could be a break in the financial system. There could be a temporary liquidity freeze. Also, somewhere in the world, war can break out in another country, as we see Russia sparring with Poland. A volcano can pop its cap. A political scandal can appear out of seemingly nowhere. The Fed may not lower interest rates when expected. ETFs may or may not get approved when expected. The spread of an illness can place countries on lockdown, as the world experienced this just a few years ago, and these are just a few examples that could set off markets to rapidly flip one way or another, unexpectedly and unpredictably, so nothing is a guarantee. Your captain, nor the platforms containing this presentation for your review are liable for any losses. This video is strictly for entertainment and leaning heavily towards the educational side only. Stay objective and stay informed. Always follow the money indicated in the chart inflows many times before key events in the social, economic, and political climate forms its narrative in the news. Take the time to like, share, comment, and subscribe if you enjoyed today's content.